Good morning, young Padawans. How is you all doing? I hope today is actually a great day, and I hope you're doing well. So it's end of the weekend, and as you all know, I always do a trade recap, a trade breakdown for possible entries and days that offered high probability setups. So due to I didn't post on Friday recap, I had to combine both Friday and both due to I didn't post Thursday recap, so I had to combine both Thursday and Friday recap in one video. And I won't really like this video to be long due to trading is generally a boring occupation. Yeah, let me just put it this way. So going straight to the chart, right here on the weekly time frame, as you all know, I'm a GBPUSD technical analyst. So this was our week 3, our week 4, and this is our new week 1 of the month of June. This is our new week. So our focus mainly right here should be on this candle range right here, the price action behind this candle range, the market narrative behind this candle range, the market profile behind this candle range. Now we can see it clearly. If you have watched my previous videos, I've been documenting and signaling a sell even before this zone was met on GBPUSD. I saw it and I signaled it. So all these things that happen here, if you really want to know about the price action of these movements that happen here, go watch my old videos, dig deep. So our focus right here is this, but let's do a quick recap. A manipulation above one side of the range and close back into the range, lower prices, and it offered the 50% of the CRT candle range first before closing back. So our focus, as I said earlier, our focus is on this candle range right here. And if we go on the daily time frame, what can we see right here? This is our Monday candle range. Remember, this should be our drawn liquidity, because on the weekly time frame we are seeing a clear CRT manipulation candle. So I can clearly say that here on the weekly time frame, my first drawn liquidity should be the 50% of this candle range right here. You see this candle range, my first drawn liquidity should be the 50% of this candle range, and my second drawn liquidity should be here. Now when we are talking about this Mr. Week 3 right here, when we are talking about Mr. Week 3 right here, our drawn liquidity also changes. When we are to focus on this week 3 right here, our liquidity should be the midpoint right here, our first drawn liquidity. And we all can clearly see that both the midpoint right here and this zone is just maximum a 10 pip difference. So first drawn liquidity 50% of the CRT candle range, and second drawn liquidity here only if you are swinging the weekly time frame, because the daily time frame also offered some internal drawn liquidity. So the daily time frame also offered some internal drawn liquidity. So right here on the daily time frame, this is our Monday candle range, our Tuesday manipulated and closed back in the range, signaling lower prices. Wednesday distribution, boom. So Monday, I actually took this Monday's trade to target here, and just go back to my old videos, you would learn more about this Monday's price action, because majorly my focus should be on Thursday and Friday, so I shouldn't be talking about all this, but I'm just doing a quick recap because it's the end of the week. So because of Friday manipulated this low resistance liquidity run, which is the Wednesday and Thursday of the previous week candle range, I was anticipating lower prices immediately, but I knew very well that Monday wouldn't distribute and hit drawn liquidity, so price has to do its thing. And I was smart enough to put my take profit here and took it out. Then Tuesday also manipulated Monday's high without taking that Friday's high, because that Friday's high is our week 4 of the month of May, is our week 4 manipulation candle range zone. So this high was actually protected, it's a protected high. Now Tuesday did its thing, manipulated Monday's high and closed back in the range, lower prices. Wednesday distribution, boom. Thursday did some kind of choppy and very kind of disastrous price action, But right here, you can actually catch the Thursday move. But if your drawn liquidity was on this Wednesday high, then you are wrong, because you are not aligned with the order flow. The order flow is fully bearish. You are not aligned with the order flow. So any trade you are actually taking here, you should be smart enough to take off like 70% of your profits at the 50% of this candle range right here. So because observe this manipulation right here, observe this manipulation, swept one side of the range and boom. Then Friday, the most disastrous day, because this is week 1, NFP week, took out all these highs, and I'll show you guys the live execution. It's at the end of this video. Took out all these highs, even both Tuesday's high that I was thinking Tuesday's high was a protected high. Friday took all those highs. So market just has to do its things its ways. It took all those highs and boom, massive distribution, and it's very easy and very fast. So we have talked about the market narrative, broken down what the market actually gave us on the daily time frame. As you all know, I focus more on the 159 concept when coming to the 4-hour time frame, and we are to talk about Thursday and Friday's price action. So we are to talk about Thursday and Friday's price action right here on the 4-hour time frame. I think this should be Thursday. Okay, no, this is Wednesday, Thursday. Check the bottom to be observing the time, 159 of Thursday. So Thursday's price action here on the 4-hour time frame is somehow very little confusing. I don't really want to dig deep. NB, I don't really want to dig deep. You all should note before, because of the time of this recording, I don't really want my recording should be very long, so it becomes somehow boring. So 159 on the Thursday's price action wasn't aligned to the order flow, but it gave an entry model because one actually swept the Asian range low, which offers us a London session secret model. Majority of you won't know about this concept, but it offered us a London session secret model, and boom, 5 distribution and 9 has to retrace, because that is not the real order flow. It's just a random retracement. So whenever you are buying here, maybe you bought from the total suit low right here, and boom, you caught the trade. And I'm observing something carefully right here. MSNR traders. If I have any sorry guys, Malaysian support and resistance traders in my channel, you all should tell me what's this. This low right here, like this double close, yeah, because here we have a close and here we have a open. So open, close, low. There's this concept, there's this general name they used to call this kind of zone, right? So they know what they used to call it. So it's also a very sensitive zone. All those stocks start at skill level, and you see them do something like this. Sorry guys, you see them do something like this, and they will add their SL right here, and they will be getting those mad RR, and they'll put their take profit somewhere, maybe right here, and boom, easy 6 RR. But that is not what we want to talk about. I'm just trying to I'm not trying to prove anything, but just trying to show you guys some little stuff. Now we'll be going to the but before going to the 1 hour time frame, the Friday's price action really offered a 1, 5 and 9. Yes, a classic 159, in which the 1 AM candle swept the Asian candle range high 1, that's pre-manipulation, and then the 5 swept the 1 AM high and closed back in the range. That is the real manipulation. So the 1 was our pre-manipulation and the 5 was the real manipulation. The 5 was the real manipulation, and the 9 immediately the 5 was a manipulation and distribution, because if you are to trade the 4-hour candle range, your drawn liquidity should be around either this 1 AM low or this Asian range low. your drawn liquidity. You shouldn't play with your drawn liquidity, guys. Be very, very sensitive about your drawn liquidity and take necessary partials. Is very, very important, because this market has its way of explaining its own language to itself. No matter what you understand in the market, you can't be 100% accurate. In life, we do make mistakes, and such we should make in trading. You need to lose, you need to pay a tuition fee to unlock some other realms. You need to pay a tuition fee to unlock some other realms, like you unlock new things in trading. So now that I actually took this trade, but I took a loss, and I'm seeing the reason for my loss, and that is improvement. And that's what I want all my subscribers to be doing. I don't want you to be dependent on my market review. Do your own market review, do your foresight, and do your outcome. And then when I post my videos, learn from mine also, because everything I'm saying here is just my own opinion. Everything I'm saying right here is my own opinion, is my own view. Not that it's a firm way to break down the price action. No, it's not a compulsory way to break down the price action. CRT traders, we have a lot of CRT traders, and they have different ways to interpret the price action. Yes, let me use the word interpret. So this video is actually getting long. Let's get to the hourly time frame and explain something deeper. Right here on the hourly time frame, now let's do a quick market profile review, a weekly quick market profile review. Monday was a distribution. Monday right here was a distribution, and I can actually say this was a distribution and reversal, because immediately it reacted from a random key level. I think it should be a 15 minutes order block, and Malaysian support and resistance traders should have something in common right here. There's this key level. I don't really know what they used to call it, but I used to see all those things on the charts, and I don't used to like attach myself to it. No, I trade what I see, not what I want to see. So Monday, boom, dropped, took out this liquidity and reversed immediately. But this trade is risky, unless if you're a pro. To take a buy in a sell condition is very, very risky. And the reversal also formed at a key time, which I want you to go to your chart and look for it. I don't want to disclose a lot of things right here. So the reversal happened at a key time, and boom. But you as a newbie, catching short-term drawn liquidity is very, very risky. Very, very risky. Be patient. Let that 1,000 pip that want to occur first, and trade the real buyers. Flow with the hedge funds, flow with the banks, flow with the international market orders, like whatever they call it. So Tuesday's price action, I can clearly say that the Tuesday's price action was a pre-accumulation, and pre-manipulation. Because remember clearly, we have a double manipulation in this week that is aligned to the order flow. So Tuesday was our pre-manipulation, and also Friday was our real manipulation. The real manipulation happened on Friday, which made Friday's high the high of the week and also the low of the week. It happens like that sometimes. So Tuesday right here, as you can see clearly, accumulation / manipulation. So there's this ranging market right here, but the manipulation was the one that happened first. So I should actually correct myself here: manipulation and accumulation. So Wednesday's price action was just a distribution. Didn't actually hit our drawn liquidity, which is our Monday's low, but actually this low was hit perfectly. And for a smart trader, you should target the 50% of the Monday's candle range, and then the opposite side of the range. So Thursday, boom, there is actually a liquidity sweep on Thursday right here on the daily time frame. So it was actually clear, and it happened at a key time also. Thursday was a random reversal, and you should actually be very smart enough to take off your profit somewhere. Now Friday, NFP week 1, NFP week. So Friday was actually the real manipulation, and it took out our Tuesday's high. at a key time, and I love to disclose this key time: 6 o'clock a.m. New York local time. So be very sensitive about the time of the day. Don't just execute off time. Be a critical thinker, because I can generally say that trading is related to chess. A lot of traders are addicted to playing chess. So in my own terms, I can say that trading is related to chess, because you don't have to be lucky. No, you don't get lucky when playing chess. All your moves are judged by you, and the you that your move is judged by is your psychology. Whenever you make a mistake, your psychology pinch you, like your mind pinch you. So but I can just keep it calm this way, that even if you make a mistake on the first move, then you can correct yourself. The mistake that you have made, you can't correct it, but you can correct yourself on the other next move you want to make. So that's why, in my own opinion, I said trading is related to chess, because also in trading, if you make a first mistake, you learn from your mistake and think critically before making your next move. So right here on Friday, accumulation, no, reversal on Thursday, exactly, reversal on Thursday to drive Friday at a key time, and manipulation, boom, taking out Tuesday's high, distribution, massive distribution, boom, and it offered a large amount of PIP. It offered a very large amount of PIP. So for your own sake, if you really want to be a good student and be better than me, yes, I should use that firm word. I want you all guys to be better than me. You should look the market. You should look at the market in another dimension, a very professional dimension. So if you really want to be better than me, go to your charts, study the price action, know the days that offered a high probability setup. I actually know all those days right here, but due to I don't want this video to be long, I won't actually disclose everything. So know the days that offered a high probability setups, because you are to position yourself in high probability setups, not just randomly pressing the buy or sell button. So I actually took the live execution, and it's kind of messy, very very messy. I don't really like my MT5 to look like that, but let's check it all together. I actually took the MT5 execution. So this is my MT5 execution. You can actually see the Monday trade right here. This was the Monday trade I took, and I shared the signal with my Telegram channel. This was the Tuesday trade, and I took out profits at necessary places. Observe this zone, and I took out another profit at the 50%. So I was actually so confident in this trading, in this price action, that Thursday would actually complete on liquidity. Because if you can see here carefully, look at this zone, very near to my take profit, and it went back. I had to hold the position because I broke even, and then Friday just came and took me out on break even, and then massive distribution. So on Thursday, 1 hour, and I took a loss on Friday also, but it's nothing. This is just transparency. And I wish you all guys good luck, good trading, and keep winning. Just keep on improving, keep on adding the 1% every day. Keep winning. I'm rooting for you all guys. So Zim Team cares.